Forex. 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 Hey, what do you want to do? Euro? You got it. Dollar? You got it. Japanese yen? It's all you, baby. British pound? Swiss franc? Let's go. Rip, rip, rip. So Barry's asked for Great British Pound USD. Yeah, we can fit that in. Hey, is that too much? Is that too much? Hey, wake me up before September ends. Anyways, yeah, all right, cool. Yeah, we can do British Pound USD. Yeah, lots going on with Brexit. We could take a look at that. Of course, what I'm looking for in general is not just one sort of market condition or one sort of risk. I'm trying to look for risk on, risk off in general, right? So we'll take a macro view of the world, try to discern sort of the feeling and sentiment of the market. Then we can drill into specific currencies: pound, dollar, euro, Kiwi, Aussie, CAD, Swissy. Yeah, we can go through all of that. Stevie says Japanese yen weak. Yeah, well, it's been weak for a couple of weeks, and we were totally ready. Absolutely, totally ready for that. So that's good. Yeah, it's a little close. Wake me up. Isn't that cool? By the way, I don't know. So I got the mic. The mic here. Let's do this. A little tour here. So I bought this mic. This is a Razer, which is sort of a gaming setup. And then this is a. Do you know Pile Driver? That company. So I got a Pile Arm, which is this thing, and it, of course, it's way over there on the other side of the desk. So I had to get a really nice one. And then this is attached, this windscreen to keep my spit off the mic. Okay. And then there's a thing on here. I don't know if you can see this part. This is actually holding the mic, and this is a shock ring. It's basically shock absorber. So if I touch the desk, the mic doesn't go as the vibration goes up the desk, up the arm, all over here. Right, so there's a shock holder, which is kind of cool. So I didn't know any of this before, but thank God Money and Amazon.com exist, because then you're like, hey, I need a solution to a problem. They're like, what problem do you have? And they're like, this problem. Oops, that problem. And they're like, okay, give us money. And I'm like, boom, here's some money, and boom, it just shows up in 2 days. So anyways, love it. So anyways, neat, right? All these things I didn't know. Okay. The markets are so hard to trade right now. Is that right, Travis? Well, let's take a look. So anyways, hey, my name is Wayne McDonald. I'm the Chief FX Market Strategist for Traders Way. Thank you very much for being a client. If you are new to Traders Way, please visit tradersway.com and open up a demo account. Super easy. I mean, really, the demo account, I think, is maybe 30 seconds. Right? Honestly. And when you're setting it up, it'll ask you, do you want an ECN account? A lot of people like ECNs. Fine. Other people prefer variable spread or fixed spread. If I were me, I would go for variable spread. I've done that for forever and ever. I've always been a variable spread person. Just from, I guess, being born into an intraday trading world. Let's just, right? Now, if you're scalping high volatility events, news scalping and stuff, you might want a fixed, or you might want an ECN, just because you always know what your cost is. You're never subject to maybe, again, a variable spread at some moments in time when the market's illiquid will be higher than normal, but almost always be lower than normal. Some people don't mind paying commissions instead of spreads, so they prefer ECN. Cool. Either way, man, it doesn't matter. So yeah, so anyways, visit Trader's Way and open an account. Look how beautiful that is. Make sure you download your MT4 and come back to this YouTube channel, and you'll notice in the description below there's a link to download all my chart templates. It's going to cost you $5 because I need to cover my server costs and my development costs and all that kind of stuff. So all that. So imagine, get your account to Trader's Way, download my chart templates. Now you have all the tools you need to be successful. The tools I've been using for 15 years. I mean, like, you don't need to search for another crystal ball. So anyways, tradersway.com. Yo, yo, yo. All right, now the chat is not displaying over here anymore, huh? That's interesting. Let's see if I can fix that very quickly. I have... Wake me up before... Oh, it is actually Jean... Oh, I guess it's just a weird lag, I'll have to fix that. Anyways. So, you guys want to get going? All right, let's get going. We'll start here. Euro ZAR. It's not something I cover very often. You can see I do have a trade plan on here from a couple of weeks ago. I think you guys remember doing this. I don't know. What do you think? You see the overall plan? Makes sense, right? Okay. Okay, that's the general plan. Now, inside of sort of the strategic plan, there's always a tactical plan, right? The tactical is lower low, lower high. You know what? Let me redo that. Oops. I didn't mean to. Can I undo, undo? Undo. No, I can't undo, undo. Let's put this back. Let's do that. Okay. Now I want to do this, and I want to do that. All right, let's see if this works. Down, up, down, up, down, up, down, up, down. See how it works? That's price action down. And then what happens next? Uh-oh, shields up, red alert, right? We get a change of direction, change of trend. Okay, same thing. Up, 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 down, down, buy. 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 Up, up. Could be a change of direction, right? Change of trend. So how do we handle that? Well, if I were me, I'd change the color. All right, let's go to orangey. Orangey. Okay, now we're orangey. Down, 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 up, up, sell, down, 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 up, sell, down, 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 right? And maybe something like this is what I got anyways. Does that make sense? Strategy and tactics. Wake me up before September ends. Does that make sense? Cool, right? So, what else is going on? Let me get out of my drawing tool. Let's give it a couple clicks in. What else do you see here that might make sense? You see anything? Yeah, you got it. Weekly M3. Okay, so the way I look at it here, let me fatten this back up. Okay, so the way I'm looking at it is it's a role reversal, right? It's a breakout retracement, okay? And then on top of that, we got this idea of break low, retrace, continue low, okay? Notice if you were a bull, you would have done the exact opposite. Bulls would have bought down here on Sunday, actually, And that's exactly the right thing to, as well. Okay? So once again, it's really irrelevant to me whether you're a bull or a bear. The part that's relevant is that you are a bull or you are a bear. Both of these are straightforward trades. Both are correct. Okay? Doesn't matter which one you did as long as you did one and it fits your fundamental bias, right? But I'm hoping for another move down, so I'm going to call this a double top. I'm going to call this a lower low, and I'm hoping this is going to prove to be a lower high that produces a new lower low. Whoop. So you get a double top, lower low, lower high, lower low. Cool, right? Jimbo says late in the week. Well, to me that's not that relevant, but I know what you're saying, and that could be true. But if I was a bear here, I don't really care about the time per se. Okay? We never really breached the M3. You can also see we're playing off of the monthly M3. Monthly M3 is my friend. Weekly M3 is my friend. So the day of the week is not that relevant. Like, I don't really care. Okay. But that's a good point. Even if I don't care about it, it's good to know that I don't care. So thank you, Jimmy. Okay. So we'll see. That's all. We'll see. Okay. It only pays me 900% a year. Who's got time for that? Yeah, but that's the same thing though, Jimmy. Jimbo says next week's M3. Well, that's right here. So it's the same thing. But, and you're right, I actually have that incorporated, but it's the same thing, so I don't know. It's the same thing, so it didn't need to be said. Okay, down is down for whatever reason. You might say, oh, but Wayne, it's a 618, and that's what's going to make it go down. Great. Dude, I don't care as long as you sell it if you're a bear. Sell it at resistance. So where's the resistance, right? That's really what it comes down to. Are you a bear? Yes. Is it trending low? Well, it made a lower low, and this is a lower high. Oh, so it's a role reversal. Yeah, you have resistance. And then you're like, well, I got this. Okay, take a shot, dude. Take a shot. What's up, Captain Cook? Daniel-san. Good morning. All right, so let's move on.com. Yeah, Captain Cook, big figure in history. Discovered Sydney Harbor, for example. All right. Take a look. I guess we should go over to the yens. So we just killed it, crushed it on all the yens, right? But we also knew they were very toppish. So do you remember yesterday I made a big stink about British pound up in here? Like, this is just a dumb place to buy. Way late, way late. Why would you be aggressive up here? All that kind of stuff, right? I think we were on this R1 area. And I said, really, we probably will get an Arctic turtle. How many people remember that? Specifically the Arctic turtle. Boris, as soon as the market believes the Fed is done cutting interest rates, sell the US dollar. Okay. Now, for those that don't know what an Arctic turtle is, it comes from an old story from, I don't know, a very long time ago, over a decade ago. And it came to like a turtle is slow. And every once in a while, the turtle will take a big risk and stretch his neck way out to get a high branch of food. And chop! Someone cuts his head off, cuts his neck off. It's a horrible story. Now imagine you're so slow. You're a turtle in the middle of the Arctic. Now that is slow. You understand? Have you ever seen a turtle in the Arctic Circle? They're very, very slow. So anyways, those turtles get their heads chopped off, right? Because they're sticking their neck way outside the shell and they're vulnerable. So anyways, it's an old funny story and it has to do with scenarios like this. And of course, I called it yesterday. Called it! It has to do with some traders are trading the monthlies, right? So they know to get out here. But some traders are trading the weeklies and their target's a little bit higher. That's all it is. So what'll happen is the market will creep up closer and closer and closer, okay, to this area. But some of the market's going to stretch its neck out and go for this higher target outside the monthly. Okay, the weekly guys don't see the monthly. But here's the thing. Both the monthly traders and the weekly traders agree that somewhere up in here specifically between 140.75 and 141, they need to get out. And so it'll happen fast. Okay? So it'll go up and meh. Okay? And so that's what I talked about yesterday here, that it's so late, and right? It's so late. Clearly you don't have a plan. Clearly you're chasing price. They're high risk pips. And that's not what I'm teaching. I'm teaching patience and discipline and planning. Okay? So for those that didn't know what an Arctic turtle is, I hope you now understand. Wake me up before September ends. Cool. Do you need to wait for a double top? Well, first of all, I'm a trend trader, so I very, very rarely trade against the trend. All right? Rarely. So, like, why wouldn't you just buy this? You're like, well, I can make some money here. Yeah, well, the way I describe it in the book is like you could do it, but it's half the profit potential for twice the risk. Okay? So it can be done, but, you know, I guess here's how I would do it if I were me. And let me make this a little thinner. All right. I would look for something like this. Okay. So if you were going to trade it down, you could do the pink next week. Okay. But see, like one of these things is how could you be a seller in an uptrend? It's not a very good thing to do. I'd rather you say you will wait for, you know, and you're asking about a double top, but a double top on the smaller time frame. So what I mean by that is, let me get my drawing tool again. Okay. If you're talking about like a double top here, it doesn't change the fact that we're still above this area. So you're only a short-term bear, but that might be all of next week. So I wouldn't do it with this setup. I might do it with dailies. So you should probably use your daily pivots in that case. Okay? And realize that you might get hung up on S1, but if you hit the M1, you definitely need to take your profit quick. Okay? But short term, okay. I suppose. Right? I suppose. Smaller money, but we can take a look anyways. Okay? There you go. Okay? Throw it down. Okay. Amazing, huh? We dropped from almost let's say 141 and a half. We're now at 139. Okay. Now realize when I was talking yesterday, we were up here. I'm like, don't do it. Don't do it. You can see how quick the moves were. Finally, it did do it, and then it immediately collapsed. Well, look. By the way, every time you miss a trade, you tell yourself how much money you would have made. But then what you don't realize is the mistakes. So if you didn't set your trade up in advance to begin with and didn't trade this, you would have paid the penalty by trading this incorrectly as well. And my lesson to you yesterday when I told you my goal is to teach you how to be patient and disciplined is to miss this part entirely. Because trust me, situations like this is where your mistakes are and where bankruptcy probably lives. Okay? And what I'm trying to teach you to do instead is I had you 2 or 3 weeks in advance. I'm teaching you to be patient, to be disciplined. I'm giving you lessons like it's not, your success and your profits are not coming from you being right, but from you being consistent and waiting for market conditions. And we had prices down here, and if you recall, I actually wrote, somewhere near 130, I'm looking to buy. Do you remember that? I actually wrote it out. So your better house, your faster car, your nicer watch, nicer watch, better school district comes from setting this up. Okay? And pissing around with trades up in here, I think I said it was something like a fool's errand. And of course it is. Okay? And so hopefully you got a lesson from that. I don't know if you did or not. Yeah, Freudian slip. Yeah, I guess so. I don't know if I should drink my coffee or if I should drink some water or drink some tequila. Short term, over a couple of weeks, USD yen target 107.85. Well, yeah, I don't mind. Yeah, I don't really want to trade those two things. That's what it comes down to. But we can take a look. Let's just look at it. So you want dollar weakness and yen strength. And I don't like that scenario. And it's almost difficult to put that together. So just fundamentally, I don't know if I like that. Now, of course, this can go up and down. But, all right, so let's take a look. So 107.85. Yeah, it's just a swing trade, yo. And it would be 1 week. Live Trading Business TV. That's a valid plan, but it wouldn't take a couple of weeks. It'd be 1 week. That's just straightforward. Okay. Yeah. So there's nothing to that. On a monthly basis, we're not really doing anything. We're just floating and farting around. So this isn't it's not a very good trade. But if you look to last week, look at this, M2 to M4. That's straight out of the textbook. Now, the week before, you would have, if you were a bear, you would have sold M3, okay, and targeted down here. Now, it did go up to R1, and we had this conversation yesterday, right? Where if you're swing trading, your stop should be below the S or above the R. In this case, you would have got a shake of a lamb's tail away from getting knocked out, but it looks like you wouldn't have gotten knocked out. It would have been close, but you would have survived this and you would have hit the home run. Let's see. Here, there's a small trade. It didn't quite work out. You only went 3/4 of the way. Here's a trade that worked. That's an M3 to M1. So there's trades here, but it seems to me every week there was probably something better. So like, for example, here's what your trade plan would have been. 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 And this is what your trade plan would have been if you were a bull. Some of them worked, some of them didn't. Some of them you didn't get setups. Cry me a river. Okay? On this case, you would have tried shorting here to get that. You would have tried shorting here to try to get that. You would have tried shorting here to get that. You would have not had real... you might have tried. I don't think so. And then, once again, you might have tried and you would have broken even. Okay? So let's take the ones out. Okay? So that one gave you nothing. This one, not a real setup. This one probably worked. This one, you would have double dipped it. This one, yeah, kind of worked. This one worked. This one did not work. This one didn't. It worked for 2 days, but I'll take that out. And that one worked, and this one didn't actually set up. So if you were a bear, you would have caught it 3 times and made money. If you were a bull, you would have caught it 2 times and made money. And if you're something in between, you would have lost. Okay? Right on, guys. No, my pleasure. Okay, so live trading says a short target of 107.885. Yeah, but the part that I'm picking on is in 1 or 2 weeks. You should be more specific. That's definitely, in fact, I would be trading that now. And I would guess by Tuesday, maybe Wednesday, you would be out. So I'd actually say 4 trading days. I'd be trading it now, and we would be done in less than a week. This 1 or 2 week thing is nonsense. Okay? So be more certain, be more specific, okay? Yeah, completely valid. Okay. Now, here's the other side of your trade, though. Okay, here's the bullish market is going to buy it between 108.50 and 108.35. So if you get a bounce here and you find yourself back staring at 109, get out at break even. Okay. Wayne, bulls buy at pivot or S2. No, nobody buys at S2. Bears take profit at S2. Okay. Okay. Wake me up before September ends. So let me take the opportunity now to ask you to subscribe. If you're enjoying this channel, make sure you're a subscriber. And also let me ask you, to leave a comment on recordings, okay? So if you're watching a recording or you watch a recording in the future, would you be so kind as just to say hello? Just document to YouTube that you care. That's all I'm asking. Just say, hey, thanks, Wayne. Or even better, if you truly want a learning experience, the most important part about learning something is recall. So we don't recall about 90% of everything. Okay? We just go through life one step at a time. And, you know, maybe if there's a nice scent in the air, maybe you go, oh, and you kind of wake up for a half a second. Oh, that smells really nice. And then you go back to just autopilot, right? So you got to get yourself off autopilot. You've been potentially watching me trade on YouTube for 13 years. And you could just the whole time be on autopilot, right? So you got to find ways to take yourself out of autopilot and really like click and then mark that in your brain, right? So take the opportunity after a webinar. You know, the video recordings are usually available within 5 minutes, okay? So stay the 5 minutes, write on a piece of paper, you know, stop and think, what did you learn? What was your takeaways? Maybe take some notes and say, oh, that was really good, and write that down. So then after I'm done my webinar, hang out for another 5 minutes, I don't know, get a cup of coffee or something, come back, and the recording should be available. Document, and this is a document to yourself, really, what your key takeaways were. This is for you, right? And you can go back and look at the comments that you posted and right in your YouTube account and just look at all the things you've learned. Maybe at the end of the week, review your key takeaways for the week. Okay? But document so that you can recall. That's the most important thing. Recall. What do you recall? Because if you can recall it, it's knowledge, it's yours. Okay? It's your ownership of the knowledge now. Okay? Make sense? So please do that if you could. Okay, let's take a look at the normal setup. Let's do oil. Let's do gold. Yeah, that's cool, Ernest. Okay. So look at this. Should I buy this? It's been up all week. Well, let's take a look at the swing trade. Okay, you ready? This entry predicts this exit. Okay, so if I traded this on the very first day of October, my target would have been 1.111111. Hey, look, we're at 1.111. I would exit and I'd be done for the month. So for anybody that cannot day trade or intraday trade, if you can only place a few trades a week, if you only have a few hours a week, I invite you to join my swing trading group. I will teach you how to put together trades that last between 100 and 300 pips each. Sometimes they last 3 days, sometimes they last 3 weeks, but you don't have to sit down every day at London Open or every day at New York Open and try to scalp 20 or 30 pips at a time. Now, I think you should learn how to do that, but in the beginning you might have a a job. Sorry. A job. A job. Sorry. You might have a job. And so you're like, how do you raise your kids? How do you go to grad school? How do you have your job? And how do you trade? Oh, I know that I can answer that question. Swing trading is the answer. Okay. So that's a swing trade on a monthly basis. All right. So you would have done that the first day of the month and you were done for all of October. Now you're taking these pips. So you got in around 109. So you're up 200 and something pips. You're putting the pips in the bank and you're done. Oh, was that getting loud? The mic's that good now? I got to be careful. Hey, Ronnie. Good job. Wow, sounds terrible. So anyways, how about a weekly swing? This is a beautiful weekly swing here, and this is a beautiful weekly swing. And of course, that's what I'm planning now on Thursday. So on Thursdays, the swing trading group meets, and we are meeting today in a couple of hours to set up our trades for all of next week. And we're already going to start thinking about November. Okay? Make sense? So if you need to know how to swing trade, if you need to know how to spend an hour a week on Saturdays or Sundays to put together your trade plans, right? That's what you need. If you have a job and you need to trade your way out of your job, you need to start with swing trading and work your way down. I prefer you start lower and work up, but hey, man, sometimes you got to do what you got to do, right? Okay. What else is going on here? The weekly plan is dead. Do you see that? So let's go through it one more time. The monthly swing says here to here, get out. The weekly swing says here to here, get out. So what do you think should happen? Well, first of all bulls should get out. Yeah, pure mathematics. The lot size does not impact the way you trade. I don't care if you scalp or swing trade. Okay? Doesn't matter. Wake me up before September ends. I'm trying to get this chat to fit in there a little better. It doesn't fit in there even when I resize it. Oh, whatever. I'll try to find another way. Okay, so Prince Philip is already thinking ahead. If bulls are getting out, does that mean bears should be getting in? It doesn't mean they should. It means first you have to have stop hunters show up. Do you want to be a stop hunter? Okay. Do you want to hunt other people's stops? This is where you show up. You know, bulls on both time frames, longer term and medium term time frames, are thinking about possibly exiting. They're like, I should probably exit. I should probably exit. Now, hardcore disciplined institutional traders, they already did their job. They don't think that way. Should I get out? Should I get? They don't think that way. They're done. Hardcore samurai in your gut, they don't care, right? Samurai warrior, done. Okay, but there are many other market participants that are not. They're not that way. So what happens is they're like, should I get out? Should I get out? What about now? Should I get out now? Should I? Okay, so they don't know. Now, if you were smart about this and you were a short-term trader, so you're a scalper now, you would force them to make their decisions. You would hunt their stops. So some traders are going to move their stop closer. Some are going to manually exit. But as you hit stops and as you force people out of their trades, they're actually selling. Because remember, they're already long. So when they hit take profit or their stops are hit, either way, the broker to offset their long positions has to execute a short position to offset the long. So it's really a form of selling. So now if you sell and force someone to manually get out, they sell too. And then the market drops a little farther, and then someone's stop gets hit, and now they get forced out, and it falls a little farther. And then, and then someone else shows up and sells. And so now for the next couple of hours, or let's say the rest of the afternoon, you're actually hunting their stops. Don't be cruel. Right? So yeah, you're cruel, but that's how you do it. Everybody likes the new mic. Yeah, it's a little close, but right? But neat though, huh? Look at that. And I guess the stand is 5 feet away. My desk is 5 feet away. And it's actually on the floor. The cheap ones, they just kind of bolt to your desk. I have a giant, huge, heavy mahogany desk. You can't bolt things to it. So anyway, so it's a floor standing version. It's pretty cool. So anyways, yeah, you guys on a 5-minute chart, for example. Okay, now remember when you're scalping, most people don't have a bias. There's nothing fundamental going on. So you're simply trading this technically, right? Okay. You still should throw down levels of concern. Okay. How long does it take? Swing trading is not complicated. A few hours and then a year of practice. No room echo or reverberation, loud. Right on. Thank you, Ronnie. Peterson! Get in here, Peterson! It's just, Peterson's such a great name, especially if you're an angry boss. I don't have a Chinese name. I have a Vietnamese name. My name is Win. Cool. All right, so anyways, are you going to scalp against these suckers? Okay. So over the years, I don't scalp anymore, really. I use 1 minute and 5-minute charts to enter my trade plans. I used to love scalping. Loved it. Like I said, I traded one entire year only on the 1-minute chart. But things have changed, and I'm really surprised how much scalping is still talked about in the amateur retail Forex crowd. Okay, but I think it's because it's being sold to you. They're like, right, you don't have any money? You broke? You want to get rich quick? You should just scalp. Scalp your way into millions. And that's what's sold. And people are like, yeah, I'm broke, but I want to be rich. So yeah, I guess I'll scalp. And then you could justify this logically now. You can say, well, if you don't risk a lot of money, you can't lose a lot of money. Of course, that's retarded. Of course you can. It'll just take you many stupid trades in a row. But that people can totally do that, right? So when I scalped, I would pull the trigger. Let's say I would have pulled the trigger in the last 5 or 10 minutes. And within a half an hour made 40, 50 pips. How long does it take you now to scalp on one trade 40 or 50 pips? 5 hours? How long does it take a normal trade to make 50 pips? In your experience, guys. 3 hours, 4 hours, 5 hours. I'll give you an example. Let me give you an example of when I used to scalp like a lot. Okay. I used to make like 1,000 pips on a trade, sometimes in a day. Let me give you an example with, we'll go to the energy complex. This is a great one. So you guys are answering 2 hours, 6 hours, 10 hours, 3 to 6 hours. Of course, it depends on the currency and the market conditions, right? But you can't do it in 20 minutes, can you? But let me give you an example here. This is oil. Let's measure $1. Okay, so here's 53. Where's 54? 54. Okay, there's $1 of activity. So this week, we've gone from almost 55 to 52 and a half. So let's just say $3. Okay? When I scalped oil, my favorite time was when oil futures closed at 2:30. I would open my charts at 2 and start planning. At 2:15, I would get serious, right? I would drop into my 1 minute chart. In the last 3 minutes, at like 2:27, I would drop a trade. Okay? And I would make $2 or lose $2 in the 3 minutes. And sometimes I would hit close and I would just stop breathing because let's say I'm up $2. So I'm up $2,000 in 90 seconds. And then I'd hit close and I would never know if I'd end up with $3,000 or break even. And then finally it would close and I'd look like, did I make any money? Because of slippage and stuff. And I'm like, okay. In the afternoon, New York time. Okay. So oil would move $2 or $3 in the course of 3 to 5 minutes, not 3 to 5 days. So can you see, like, from someone that grew up in that kind of environment, scalping now, like CPI pops out and it moves 19 pips. And then I see all these people on YouTube like selling the dream, like, I made $1 million scalping CPI. I'm like, it only moved 19 pips. Are you mentally deranged? What kind of scalp is that, right? Well, that's a different, that's not, in FX Bootcamp Live, I don't actually call that scalping. You are learning how to enter and execute trades. Okay? Because most people come in, let's say, to get into FX Bootcamp Live, you have to watch all the training videos, right? So you technically know how to trade. You understand? Like, you know the theory and the reasoning behind trades. But it doesn't mean you know how to enter and exit a trade. And, you know, most people bite their fingernails and everything changes because they actually have to make a decision, right? So you have to get used to and then comfortable with and then awesome at actually trading. Okay? And the way you get into that is through, well, in that case, scalping. You got to be good at entering trades, okay? And then you can learn how to stack and compound those, right? And then you can go back to your theory and say, oh, I get it. So when I look at balance of trade data out of Australia and I see that they're importing more than they're exporting, I should probably be bearish on the Aussie dollar. So now I can open up my charts and do monthly and weekly and daily swings. And then once I'm in those price zones, drop into a 1 minute chart or a 5 minute chart and scalp my way in as a methodology for refinement into my actual fundamental trades. Right? But that's not scalping either. Right? Do we agree on that, Jorge? Yeah. So here, if you don't know what I'm talking about, go to FX Bootcamp, insert some money into the slot, watch 30 hours of training videos. It might actually be more like 45 hours. But go through and then watch them all 2 or 3 times. Okay? When you're done, go to FX Bootcamp Live and get mentored by a master. And probably every 3 days I get a big, long email by someone in FX Bootcamp Live telling me how amazing the program is. Like, change your life. Amazing. Even the people that can't get through it because it's too difficult, they're like, look, I got to drop out of it because it's crazy, ridiculously challenging. But it's everything I absolutely needed. And now I really see, I see the light. I just have to clear my schedule and, really seriously get my life together so I can be a successful Forex trader, right? And imagine when you're there. Oh my God. So for anyone that's starting to see the light at the end of the tunnel, that's the path you need. All right. Come here every day, open up an account to Trader's Way, go to MetaTraders, get my chart templates, then sit here for 6 months, 12 months, 2 years, whatever. Then go to fxbootcamp.com, start getting serious about going through and getting a proper education on fundamentals and technicals and all that kind of stuff. And then once you got the education, then you need to learn how to be a master of your art. And that's basically your master's and PhD degree in actual trading, not theory, but actually, like Jorge said, it feels like scalping because you're forced to enter trade after trade after trade after trade. Like your drill instructor, your mentor at FX Bootcamp Live, Ryan, is relentless on turning you into a master. And it's not like you just sit there and watch a video and go, oh, okay, now I've mastered it. No, you got to do the work. It's a drill instructor. Do it again. Do it again. Do it again. Do it again. Do it 5 more times. Do it 25 more times. Come back. Show me what you got. Do it again. You'll come out a huge success, or you'll quit because you don't got it. Right? Because you don't got it. You don't got the game. You got the talk. Oh, no. Wait. I'm patient. Yeah. I'm disciplined. Where's the next trade, Wayne? Oh, yeah. Yeah, I'm patient. I'm disciplined. Yeah. Where's the next trade? Good. Yeah. I got it. Yeah. Patient, disciplined. Got it. Where's the next trade? Good. Wayne, can you explain more? Boot camp, you learn swing trading, boot camp live. Yeah, no, is performance coaching. FX Bootcamp Live is performance coaching, right? Don't walk in unless you think you got it. Like, right? There's 2 reasons to go to FX Bootcamp Live. One, you think you got it and you need to test yourself. You're like, oh yeah, I got this. I'm a really good trader. I'm going to be a pro. I'm going to start a fund. This is all good. I'm going to test myself. And you will wake up. Okay? You will wake up. And you'll see reality. Good, bad, or ugly. Maybe you do got it, but I bet you don't got it as good as you think. There's room for improvement, yo. Right? Or you're like a grad student. You've quit your job, right? and you're focusing on this full time, and you want it, your education is your prime focus, and you just want more. You just need to consume more. You're a meat eater, right? You need more. Give me more, right? You got like a funnel and you just want like raw meat pushed into the funnel. FX Bootcamp Live. Because most people can't make it because they don't have the discipline. And you know you need the discipline, right? And people do it because they're like, whoa, man, this is hard work. Wayne, I thought I was going to be a millionaire, but it's turned out this was hard work. It's not easy. Ha, ha. Yeah. So yeah, start with the video training because you got to have knowledge. Consider that like your undergrad. Go get your bachelor's in Forex trading. You need to know fundamentals. You need to know monetary policy. You need to know how to use an oscillator. You need to know how to use pivot points. You need to know how to scalp, spot, and swing trade. And you need to know how to carry trade. Like, this is just basic education. Then when you're ready, and let's say you've been trading on your charts with me in these free webinars for a year, and you're like, yeah, I get it. Oh, I get it. I'm pretty good at technicals. And you're like, I've taken all the videos at FX Bootcamp. I understand monetary policy. I get it. I see how that influences, how money supply influences interest rates. You get it. You're like, okay, I got it. Good. You got a bachelor's degree, boy. Now, let's see you trade. That's when you need a performance coach. Okay? That's when it gets serious. So, anyways. Oil. Okay, I kind of already did oil, but well, there's nothing to really do there. Kiwi Swissies just fizzled out. Gold, I guess we're still there. Gold is kind of fizzled out. But remember I said yesterday, if I was forced to do anything yesterday, I'd be a bear, not a bull, and it dropped and then fizzled out. But of course it fizzled out. So we're still yield hogs. What else is going on? Vic, everything is supply and demand. Although someone asked me that a couple of times more recently, so I think that's somebody's new thing. I don't know I have to do this. I think it's somebody's thing now. So somebody's got a course or pitching a thing about, I'm a supply and demand trader. What the hell does that mean? Everything's supply and demand. But the other one is, how about this? Do you ever get like emails like, come to my seminar and I'll show you the secret on how banks trade? Ooh, really? How banks trade? How do you think banks trade, guys? They have secrets, right? Do you know any bankers? Yeah. You know any bankers? Like, first of all, they're not Illuminati. I need to be careful because I have a lot of banker friends. How about this? I used to pay money for a service that actually showed me the trades that banks were making. Some of the banks, like I think it was Morgan Stanley, would say things like, no, actually, it wasn't their opinion. I actually saw their positions. So they had trades where they would sell at like 125 with a target of 120. What does that tell you if you see that kind of stuff over and over again? Buy at 110. Our target is 115. When you see, like, because you can actually see the positions, you can see that they're just making it up. Right? And you can see this, like they're just randomly picking numbers, big round numbers, and sitting on it for long periods of time. And then there were a bunch of other banks, right? And then the other one I remember a lot was Credit Suisse. Holy crap. These guys would trade, like Morgan Stanley would make trades periodically. And Credit Suisse would trade like madmen, boom, boom, completely opposite personality. and like 80% wrong. Okay? So anyways, after watching this for, I don't know, about 6 months, paying a small fortune for it, the banks are horrible. Banks are horrible, so whatever. Vic says supply and demand levels to catch is where banks are well, mostly those are pivot points and psychological levels, but it's so idiotic to think like that banks do. What does that mean? Do you know what banks are? They're people. They're like me inside of a building, but even that doesn't. I'm inside of a building now, right? Okay. Now, in the United States, banks don't have prop desks anymore. So banks don't even trade in the United States. Outside the United States, banks still have prop desks and stuff, right? But most banks, in most of their business, are just transferring money from one economy to another and converting them through the foreign exchange market, right? So don't get all crazy about, you need to trade like a bank. It doesn't even make support and resistance. Oh, well, I use support and everything is support and resistance. Okay? It's just really funny. It's really funny. It to me, it smells like bait. High frequency trading would be done by hedge funds and other, even high frequency trading typically isn't even hedge funds. They're like Renaissance that maybe started out as a hedge fund years ago, but that's all private money. Because especially in the beginning, high frequency traders didn't lose because they were actually sort of cheating. Legally cheating, but it was cheating. Yeah, no, Vic, but Vic, the way to look at it is technical analysis. Okay, so let's get out of this. Let's find something else. So like with let's look at pound. Okay, so let's go to a little bit bigger of a chart. Let's do the confluence. Okay, all right. So support and resistance levels. There's two ways of measuring this, Vic. Okay, one is price and one is market. You following me? So first of all, let's look at price. So let's go to a 4-hour chart. So you're technical, right? So you're using things like price action and such. Cool. So the first thing we would do on any time frame is we would mark the key levels of support and resistance based on where price was. So I would say this is an important level, for example. I was trying to catch something over there, but I can't really. So there's something up here. And then, of course, everything in between, right? So you might line up these as a top. So let's do that. So this seems to be important. That seems to be important. That. And then it consolidated. Then it was important again. Then important again. Then important again. So somewhere in the future, it might be important again, right? And so on and so forth. But what am I connecting? Levels of price in the past that may be important in the future, right? So as a technical trader, you're on that. Okay, price action, support, that's support and resistance, by the way. That's where buyers will buy at support, sellers will sell at resistance. Okay, we got it? Okay, and then I also use support and resistance of not price anymore, because we're just connecting price, and you can see breakout, pullback, roll reversal. Okay, so this was predictable based on stuff that happened 6 months ago. Okay, that's price. Now, using support and resistance of the market, what we're looking at here are, we look at, hang on, let me get a little more price in here. Okay, so now using support and resistance of the market, one of the things that we calculate is we look at the low, the high, and the close of the previous time frame, the last month. Okay, what happened last month? Okay, well, we opened low, we made a high, and we closed higher than the low, right? We closed higher than the lowest market, which means the sentiment at the end of the period was more bullish than at the beginning of the period. Okay? That's indicated here. If it was simply an average, we would look at high plus low divided by 2, right? That would get you the mean, right? The mean. We're not interested in the mean. We're looking at a weighted average. High plus low plus the close divided by 3. That gives you a weighted average, which then weights it based on the sentiment of the market at the end of the period, because you want to include that sentiment in the new period, which is currently the month of October. Okay? All of this is done this was all done in September. So we knew on this day here, let's do this in yellow. In this yellow area, we knew based on what happened in the past period that the market was bullish. Okay? This is looking at now simply support and resistance based on the market in the previous period. The previous period could be yesterday, last week, or last month. Some people go beyond that. I don't go beyond that. Some people go, 4 hours and 1 hour. I don't do that either. Okay? That's too much. Okay? So anyways, based on that, now we have new levels of support for the market. That's what these are. Support and resistance for the market. Okay? And under those rules of engagement now, let's do this in a crimson. Okay? What we want is this. Okay? And we actually had this planned a week or two. Okay? A week or two. Some people here may remember around September 15th, I told you I was already planning October. Already planning October's trades. And you already knew I wanted all yen pairs to go up. How many people can confirm that? September 15th, 2 weeks in advance, that I was a bull on all yen pairs and looking for trades like this. Okay? Okay? So that's support of the market. And with price action, you're using support and resistance of price. Support and resistance of market, support and resistance of price. This is what the big banks, hedge fund managers, and high frequency traders and your grandma trades. Okay? This is the secret. This is the secret. Okay? Instead of me telling you this is how what the big banks do and the hedge funds and all this, I'm just teaching you how to plan your trades based on a combination of fundamental analysis and technical analysis. Not to guess, not to memorize, not to follow rules. I'm an entrepreneur. I don't follow rules. I break rules to improve them. Okay? I want you to understand. Okay? Max says, you're bullish yen pairs, but it's weak against the... What I mean is yen pairs go up. I don't mean bullish yen pairs. That doesn't mean buying yen. Bullish on yen pairs means up. So short Japanese yen, long yen pairs. And by the way, I did it last year, the year before, the year before that, 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 and the year before that. And some people here have been with me that long, and they can tell you it ain't no joke. Right? Yeah. Vic. No, you're here, man. Make sure you subscribe, Vic. That's what it's all about. Join the family, yo. Good job. Look at that. See? P-Dub, look at that. 1,860 pips on Beast. Close today. Snap. On the logical target. Like, it's such a good trade. Like, your exit, by the way, getting long a yen pair this time of year and making money, like, to me, that's just like knowing how to vacuum, right? You're like, you vacuumed the living room yourself? You're like, yeah, right? That's not, to me, that's like, okay, good trade. But Peter, P-Dub, that exit to get out at monthly R2, weekly M4, that's golden. Sweet, man. Like, that's perfect. Now, hopefully you get a dip. So, in years past, it just keeps going. Remember, I don't start biting my fingernails on my yen trades until Thanksgiving. So we have another 4 weeks, right? Jimbo's got over 1,000, right on. Yeah. Very cool, man. Yeah, those I made 2 yen trades last week. They're up like 350 pips right now. Just two. You should be on 5, right? But anyways, just amazing exit. That's great. Now, hopefully you get a pullback. I've seen in years past where it just keeps going. It just goes. And you're like, oh no! But it doesn't matter. You can never cry about, I only made 1,800 pips. It could have been 2,800, right? But anyways. Now, the next thing, though, of course, too, Peter, is this time of year, you're supposed to be stacking these trades. Remember, I asked you guys back in July to be prepared in August to start getting in these trades 3rd week of August and try to get 20 open yen pair positions. Does anyone remember that? Hope says I got 135 to 139 and then got 140 off excellent coaching on my part. Well, thank you, Hope. Yeah, right. So we need to stack these guys because I think I told you that my goal for you my goal for you was for you to hold a small portfolio that combined produced 10,000 pips. Oh, okay. So all right. So Peter just took 2,000 pips off the Beast, off the pound yen, but has 9 other open positions. There you go. That's what I'm talking. Good job. Woohoo! All right, so I don't know. Let's wrap it up. I have a swing trading meeting in about 90 minutes that I got to prepare for. So let's do this. Step number 1, go to tradersway.com, open an account today. 2, download MT4 from Traders Way. 3, go to metatraders.com, sign up for my chart templates and other trading tools. If you don't have the right tools, you're going to suck, right? Imagine being a plumber with a bunch of carpentry tools. Good luck. Right? Then go to FX Bootcamp, pay money, and get trained. It's education, whatever. I pay Harvard money. Doesn't mean Harvard's in it for the money. They're, right? Dude, get educated. Got to know what you're doing. After you watch the 45 hours of training, do it again. And once you've watched them twice, do it again. And after about maybe a year, maybe 6 months of watching the videos, coming to my webinars every single day, taking your trading very, very, very serious, and you're ready to get to the next level of success, you're ready for a real challenge, You want to test your proof. You need a proving ground. You need a performance coach. You need a drill instructor. And you need someone to hug you once in a while or spank you once in a while. Then that's FX Bootcamp Live. But, okay. What else can I do for you? I don't know. All of these things you've asked for and I've created for you over the years. They're all resources. Okay? So thank you to Traders Way. Thank you for being in my daily webinars. And thank you for all the hard work you put into this. I hope you see the light at the end of the tunnel. But even with good tools and good training and good support, it's still going to be blood, sweat, and tears for years. It's not a get-rich-quick scheme. If you think you're going to get rich quick, you may not have half a brain. If you're going to be successful in this business, you need at least a half a brain and a ridiculous, sickening work ethic and years of experience. If you think you could bypass that, you're not on the clue train, brother. Wake up. Wake up. Cool. I'll see you guys tomorrow. If you're on my swing trading group, I'll see you over at swing.fxbootcamp.com in 90 minutes. Whoop, whoop. Have a great day, guys. See you tomorrow. How do I turn all this off now? Such a complicated system. All right. See you guys. Cheers.